Hey, welcome back, everybody, to another episode of Market Noise on the Financial Autonomy podcast channel. Thanks very much for joining us, especially if you happen to be joining us live on YouTube. I've got another Financial Autonomy community member joining me in the co-host seat, is what I'm trying to say. Alessandro, thank you very much for giving us some of your time and jumping on the call.
Thanks for having me. Paul. Great to be here.
Now, listeners are going to pick up your accents. I think you better fill them in. Where are you from?
I'm from Italy, Bob. I'm from Sicily.
We've done really well. We've had people from, we had a guy in New Zealand, but who was born in Kenya. We had Dash yesterday. Well, he was English originally. And now we've had someone from Italy. And I think there was someone else too. I can't think what his nationality was, but it's been great. We've had some great diversity. So we've got Italian input today with Alessandro. It's awesome. Thanks, mate. Thanks for jumping on.
Thank you.
Now, of course, the usual kind of starting point, this is general information only. It's not advice. We've always got to cover that bit off. But of course, if you're looking for advice, check out the website, financialautonomy.com.au. All right, look, let's dive in, Alessandro. And the first point of discussion is kind of obvious, and that is current share market volatility. Now, I'll pop up, if I can get this to play ball. Here we go. I've got to flick it over there. That's what I wanted to do. For the people that are watching it on YouTube, I popped it up on screen, but just the share market and what's been going on the last few days. So we've obviously got this new COVID variant, and markets don't like uncertainty. And for the minute, nobody knows if it's significant or if it's just a mild version or exactly what's going on. So there's uncertainty, and the share market has responded. So I've got up on the screen here the Australian share market, and what we saw Friday was a pretty steady drop, and then right at the start of this morning, a very sharp drop. It's a straight down drop, but it's 75 points or something like that. It's not enormous, but anyway, big enough. It's only 1% or so, a bit more. But it bounced from there, and our market finished the day down a little, down about 0.5% in the end. So we recovered quite a bit of it back. Now, part of the reason for share market volatility has been that the US market, which is normally where we take our lead, has been largely closed. They were closed for Thanksgiving, then they were open on Friday, but only for half a day. The US market went down a couple of percent, and then the weekend and that sort of stuff. So we're all eagerly awaiting moves tonight. I have just also got here's the UK, beg your pardon, this is the US market, I should say, S&P 500. You can see how that fell on Friday, a very sharp drop and then sort of plateaued. But again, it was a shortened day, so it's a little tough to get a read. The other chart I pulled up was just having a look at the cryptos, which has been interesting. In contrast, both Bitcoin and Ethereum have gone up. So again, that their role as a diversifier seems to have had some validity through this period. What did you make of it all, Alessandro, the last couple of days?
Yeah, the last couple of days, what I think is that people in inflation state that we are entering now, I'm trying to see the crypto as a way of keep their asset safe, or having an extra asset to diversify their assets. So this is something that we'll be seeing more and more in the next couple of years, because of the inflation it seems to be like something that will be lasting in the next couple of years as we're entering interest rates that will going higher, and markets will be certainly volatile, and plus there is a lot of movement around that word, the crypto, that is becoming more and more central in everyday's life for investors or traders. So this is definitely something that will be acting that way.
What's your best guess as to what's going to happen on US markets tonight? Will they drop again or will they bounce?
I think they will bounce back. Yeah, I guess it'll bounce back. Yeah, because it's just Thanksgiving. It was a little bit of disruption to the market, but they might bounce back now. Yeah.
Yeah, it'll be really interesting to see, won't it? I mean, it's for the minute. Obviously, it's there's no information. No one knows whether this particular variant is of significant concern or not. If we could get some positive news, then you'd expect the market to bounce back quite strongly. But I guess this is all layered on. I was going to say it's layered on top of issues in Europe that probably you'd be particularly in contact with around Europe going back into lockdown. So there's already a bit of heightened concern about, gee, is COVID, have we not quite beaten it? And then to get this extra variant on top. Actually, do you want to just give us a bit of an update of the status in Europe for the moment?
Yeah, in Europe, basically, many countries are going back into lockdown. Italy is actually doing quite well because they started already to roll out the third vaccine. So they introduced the Super Green Pass, which is basically the fact that you're gonna get the third dose of vaccine or the booster. To be able to kind of having a social life. That's because of the fact that they want to have people still being able to socialize and being open for the Christmas season, which is very important in Europe. And on top of that, Italy and the Italian stock market has been performing better than any other European market. So that's something new as well. Because generally, Germany is always the one that leads in Europe, but Italy has been performing well since we got the new prime minister. That was the former president of the European EU Bank. EU Bank, and so he has been giving like a lot of security to the financial markets, and stability as well to the country.
And have you seen European markets the last few days? Like, how have they responded to the new virus?
There's been a scare as well. Yeah, I've seen them. There's been a scare in developing country or poorer countries in Europe. They don't have a higher vaccination rate like Italy or England could have, so they've been more impacted by that. So it's a little bit of a scare at the moment. They've been red as well over the last couple, not by much, but they've been red. It's been a bit scared. I think I will say it's a little bit of a scare and a little bit of just a temporary things, which will bounce back eventually, because it doesn't look that the new variant will be affecting the spread. It's not as spreadable as the previous one, the Delta, it looks like, but we still got to wait a couple of weeks to see that volatility.
Yeah, that's right.
In the market, 3 to 4 weeks at least, volatility until it settles back in and bounce back, probably, hopefully.
Yeah. But it'll be interesting to see how markets react, and hopefully it is just a short-term blip. It was really interesting to see the response in the crypto markets there, that money flowed in, and I think tonight in the US will be really crucial for hopefully just stabilizing things a little bit until the word gets out. I mean, the good thing is, we've got a bit of a playbook on how to deal with this in terms of economies and financial markets now. So if it does turn out that this new one is a problem, I mean, the central banks know what to do. They were sort of easing back on the tapering, starting to do less bond purchases, but they could easily ramp it back up again if they really needed to. So I would have thought, and really also, I mean, there's charts I'm looking at with clients today, Australia's richer than it ever was as a function of share markets up, property markets up. And that's what's got to us at the end of this, or let's hope it's the end of this COVID pandemic. So really, it's not like, the pandemic and the recession the brief recession that occurred as a result, it's not like it really damaged people's personal wealth particularly. In fact, if anything, they're wealthier than ever. So to sort of, I guess, get too worked up about, well, there's a new variant. I mean, none of us want it from the point of view of no one wants to be locked up again and all those kind of considerations. But in terms of share markets, well, actually, the evidence to date is that it was net positive if you give it a couple of years, which is odd. But anyway, that's how we ended up. So
yeah.
Yeah.
Quick note on that one. Yeah, Paul. In fact, what you said is right, because the savings are increased, and the disposable income of Australians have increased as never before in the last 2 years. So,
But not just Australia either. I mean, you saw that in the US particularly, and I'd imagine you saw it in Europe too, right? Stimulus.
Yeah. Yes and no. In Europe, it's been a little bit different. Yeah, it's been a bit different, a bit of a struggle, because they didn't receive as much support from the government as here in Australia or in the US. So as a result, they're still struggling. The economy, the real economy, is still struggling. Yeah.
Interesting. Okay. Well, look, I think we've covered. I mean, there's not a lot more to report, and it could be that this all blows over in a week. So I think we've covered that one off, Alessandro. So how about you grab the second one there, which is one that you came across about ESG?
Yeah.
Take it away. Uh-oh.
So the ESG is something that has developed much bigger now because of during the pandemic. Many people thought that it would have been like pushed back, and the climate emergency has become something that has become very central in the post-COVID economy. So this is something ESG stands for environmental, social, and governance. And this is basically means introducing ethical and sustainable growth into the economy. So for this post-COVID economy and for the finance world, we've seen a lot of hype around the ESG in the last 2 years. And companies now, when they decide to make investment, they really keep in mind the ethical side and the fact that there is a climate change and the impact that they have on the planet. An example of that, it could be in the crypto. When we talk about Cardano, for example, it's been really kind of looked better than from Generation X or millennials. They've been looking into Cardano for that sustainable approach that they have compared to the other cryptocurrencies, for example, just to give a quick example of that. So, and then any other companies that are operating in different part of the economy, they are with different assets. They've been introducing a great deal of ethical investing and really looking taking care of the environment, because this is something that is becoming more and more frequent and really deep and influencing the old world.
Yeah, I think. Yeah, I mean, the article that you linked there was sort of making the point that there was perhaps an expectation that ESG considerations might have sort of gone on the back burner a little bit through COVID, that governments and businesses would have been in survival mode and, hey, we've got something bigger and more important. But it was kind of observing that actually that doesn't seem to have been what's happened. And obviously we had the COP26 conference recently, and it was an interesting piece that you found there. And and it is an interesting observation, because you would have totally thought that, all right, all that ESG stuff's nice, but right now we've got a pandemic to beat. But actually, it still remained relevant. And if anything, I mean, we've spoken in past episodes of Market Noise about BlackRock being the biggest fund manager in the world, who have very much adopted ESG as kind of mainstream across nearly all of their products. It certainly is an interesting one. And look, that was an interesting piece for sure.
Thank you. We've seen as well ATF popping up where you can invest just in ESG company or ethical company,
Yes.
popping lots, even from different hedge funds. So it's been quite central, you know, in the last 2 years.
Yeah, the ethical ETFs. Yeah, there's been a lot of growth, and it's interesting too to see that the different ways that different companies do it. Like some are, I guess, a lot more hardcore on the ethical, and others are pretty well, light green if you tried to have some sort of green spectrum on them. So it can be a little tough to filter sometimes. But anyway, it's certainly interesting. Now, you had another good one here about cryptocurrencies in super, particularly self-managed super. Do you want to tell us about that one?
Yeah. Basically, there's been that push from the new generation, especially Generation Z, Generation X, and the millennials. They've been seeing, having gains, making profits out of cryptocurrencies. They've been kind of thinking that it would be nice to have the chance, the option to have a pool of your or a part or a proportion of your super invested in crypto. So there's been a big talks around this, and probably behind closed doors, the super funds, they are certainly monitoring that and considering that option. But at this stage in Australia, this is only available for people that have self-managed super funds, or SMSF. But it certainly will become, I strongly believe that in a year or two, it will become part of our pool of investment of at least of the major super funds.
Well, it's interesting. I mean, this piece which had data from the ATO, and it's not surprising really, but actually in terms of self-managed super funds, it was a very small proportion. 0.34% of self-managed super funds have got crypto. And it makes up less than 0.1% of total assets. So exposure is very small, but I guess that's not surprising, because then they go on to say that most of the interest is exactly as you said, Alessandro. It's your Gen Zs, your millennials, not very many baby boomers, just 5%. I'm quoting here, just 5% of baby boomers were in favor of adding crypto. Well, it's the baby boomers that by and large have the self-managed super funds, because you got to have a pretty big amount in super to be bothered having a self-managed super fund. So it's interesting. So at the moment, the data is showing that actually there's not very much crypto in the superannuation space, but that's just, I suspect, which is kind of what you're hinting at. It's because it's too hard for the average person to get any exposure. But I think that'll really change once we have exchange-traded funds available that cover the space. And to be honest, I'm amazed they aren't already here. I mean, ASIC has given guidelines as to here's what it needs to look like. And so I'm sure the product manufacturers would be racing to get it done. BetaShares has got a sort of a somewhat related, crypto industry kind of ETF, but whatever. It's not actually the underlying currencies. But it's interesting, and it makes me, to me, it just highlights. I was surprised that the number was so low, 0.34% of self-managed super funds. I would have picked it at, I don't know, at least 0.5%. I would have thought it might have even been 1%, but very, very little amount of self-managed super in crypto at the moment. I think it's just age-based, but that was a nice one.
Yeah, thank you.
Where should we go next, Andre? Beg your pardon, Alessandro. You heard, how about number 4 there, possible recession? Did you want to grab that one?
Oh, yeah. So on that one, basically, this is an article that's that is saying like that obviously the Australian economy being anchored to the US economy is saying that obviously now with the Federal Reserve that is starting to do a little bit of tapering, or that will be probably happen after the midterm election in the US, more likely. So that will have obviously an impact on our economy in Australia as well, and so that is something that will definitely can can get us to our economy to slow down towards the end of next year, 2022, and starting to slow down there. But we might have some sort of recession or slowdown in the next couple of years, 2023, 2024, because the RBA, Royal Bank of Australia governor is said that will increase the interest rate in Australia. At some stage they have to come up, and because they're very low, so there will be a chance for our economy to slow down, to definitely slow down. What is your take on that, Paul?
I thought this was a bit of a nothing story, to tell you the truth. I mean, there could be a recession in 2023 or 2024. Yeah, I mean, there could be a recession any year, really. Like up until last year, which was COVID-induced, we hadn't had a recession here in Australia for 25 years. So they don't happen all that often. But I mean, it's a bit like a share market correction, sort of saying, well, there could be one in 2023. Like, yeah, there could. But, you know, the odds are that it won't be. But it's sort of, I don't know, if you make these calls, and especially this one, there could be a recession in 2023 or 2024. Oh, well, why not just say, 2025? There could be a recession sometime in the next decade. Like, I mean, just, you know, throw it out there, right? Like, I just thought this was a bit of a laugh myself. I mean, I get the idea around, you know, well, actually, I don't even really get that. I mean, the tapering, I mean, there's no US election coming up. I guess we've got an election locally here in Australia next year, but that's not going to influence what the Federal Reserve does. Here in Australia, yeah, look, they're starting to taper. Bond market saying interest rates are going to go up a bit sooner than the Reserve Bank really wants. But, yeah, I don't know. I just thought this was a bit of a funny one, really, that it was a bit of a, you know, an editor somewhere has got onto a journalist and said, hey, quick, I need something. And the journalist has gone, what can I come up with here? Hey, guess what, everyone? There could maybe possibly be a recession in 2023 or 2024. I'm not quite sure where I want to stab. So I'll take 2 years to increase my chances of being right, you know? And obviously if it's never right, no one ever finds, it's buried in the internet forever and no one ever finds it. So I thought that was a funny one, but it's, I don't know, you got to have these different views, and yeah, I mean, who knows? May well be right. Time will tell, eh? No, nice one. What else have we got here? There's an interesting one, and I feel we're going a little bit crypto heavy so far. I apologise. We've got a couple of other topics here. We'll try and get away from that. But last week I was speaking with Dash on Market Noise. We're talking a little bit about stable coins, and you know, I mean, the basic concept of stable coins is a cryptocurrency that's just fixed to usually the US dollar. So you don't get the normal volatility, but then trying to understand the use cases and things was a little bit vague. But it's been raised that these stable coins, because the perception is, well, it's fixed to the US dollar, for instance, and the implication is that there are reserves that sit behind these stable coins, right? So that, you know, you could do the switch, or like the old gold standard, where you could have US dollars or Australian dollars, and if ever you wanted, you can flick it into gold. In fact, I don't know that we actually had that in Australia. Right. I think ours was to the British pound. But anyway, used to be the gold standard, isn't anymore. The idea with these stable coins, I had always understood, was that, well, you can convert them into the underlying currency if you ever want. So there was an announcement last week. Finder is a website. I don't know what else they do, but I've seen them around. They announced we intend to deploy. They announced that they're going to launch an Aussie dollar stable coin, which there currently isn't one, right? Which is interesting. But what I particularly got out of the article that I thought was interesting and keen to get your thoughts was that we intend to deploy the capital lent to us across the blockchain ecosystem in a long-term, sustainable and risk-balanced way. But it's important to understand this is not connected to the returns we pay you. And then it highlights they only need to have enough Australian dollars to cover people wanting to swap their Finder stable coins back to Australian dollars. So they're certainly not going to, you know, if they've got $100 million of stable coins out in the market, theoretically they will have received 100 million Australian dollars to create those, but they're saying here they're not actually going to just keep all that 100 million sitting in a bank account. They're
That's
going
right.
to then invest that within the blockchain ecosystem. Now, that to me scares the shit out of me. I don't know about you, Alessandro, but I mean, if people get worried about crypto markets, right, and they go, oh, I'll go to a stable coin because that's the safe harbor, and then they go, all right, well, I want to get it out, flick it back to Aussie dollars for me.
Yeah.
And these guys have only got 10% of it sitting in Aussie dollars and the rest is in other things in crypto, which are going to fall at the same time. Surely this is the equivalent, the potential equivalent of a run on a bank. I mean, I don't know. What are your thoughts?
No, I'm very cautious and very I'm very skeptical at this stage with the stable coin, because it's something that hasn't been around, on my opinion, long enough to be able to really say if it's something that has a real value behind, an underlying value behind, and it's a little bit like altcoins, and in that actually come across on the beautiful article that you shared, and this is something that hasn't been around for long enough, so you will think that is kind of betting is a little bit of a bet, unlike Bitcoin or Ethereum that they're more established, so that they've been around for 12 years, so they're holding more than 10 years, so they're holding the value over time and they've been growing the value over time. This is a different story, but when it comes to altcoins and stable coins, I'm still a little bit skeptical, and I think that there's just a little bit of a hype around this after they started to talk about the US dollar we might have in the near future, we might have a digital US dollar, digital currency, and US might start. So probably Australia was trying to follow on that trend that is starting. But at the moment, I see that as more of a like a fight rather than a trend. If you get, this is for me. Is my opinion. I'm not I'm not sold on that.
Hey, look, we've done enough. We've done enough crypto, and we've got a couple more topics. But we don't normally have someone from Italy that we can speak to about things, so I don't want to let this opportunity go by. Can you tell us the Italian stock market? What's like? We know that the Aussie market is pretty heavy mining companies and banks. The Italian stock market, what's the big players there? What's its composition?
So the Italian stock market is heavy bank, financial based, and energy based. So we do have some. So we do have some mining company as well, but we don't have minerals in our lands. But the Italian company through other land that they previously used to belong to Italy, in Africa, for example, in the north of Africa, and they established themselves there in 60 or 70 years ago or more, and so this is something that is really strong. So Eni will be one that is very strong in Italy. Then we do have obviously the car industry with those luxury brands.
Yes,
and then we have other company like that work in a niche market, like Leonardo, for example, that is operating here in Australia, is another company that works in a niche market that is aeronautical industry. So this is more engineering, mechanical engineering, and aerospace and aeronautical engineering. This is something quite heavy in there. And the bank are quite strong. So in the next cycle that we're going in, economical cycle, they will having an advantage being based on banks, on financial and on mines. And in the future, there will be something that will be holding them quite strong compared to other economies that are a little bit more IT based, which we don't have in Italy as much as in the US, for example, or the industries that will be struggling a little bit more in the next couple of
maybe.
If it makes sense.
I mean, for Australia, for Italian citizens, Italian investors, do they, like here in Australia, now we've got ETFs that can get us international markets, but it's getting easier, but it's still not commonplace to buy shares on the US stock exchange, for instance, right? We tend to typically buy on the local ASX, most of us.
Right.
In Italy, with the European Union and everything being so much more integrated, is that the same, or is it easier for Italian citizens to buy German companies and French companies and these sort of things?
That's a great question, Paul. Thanks for asking that one. Because in Italy, it's actually quite difficult to buy shares that are not Italian, because you get double taxed if you buy US stocks, for example. If you buy US shares, you will be double taxed. You will have to pay taxes in the US and in Italy. And in Italy, it's quite high. We're having a 26% to pay on capital gain, so it's quite high. It's not on your income tax like here in Australia, but it's like it does have a different regime. So you'll be paying on your just the 26% on this one. So on
and does that double tax apply even within the European Union?
Yeah, basically, whatever it is not Italian. Yeah, it will be like that. It will be like that, obviously. Yeah.
Gee.
Double tax. Yeah, it's not very convenient at the moment. It's not very much incentivized. That's why in people from my generation, it's not as widespread as it could be in the US or here in Australia. That there is as well a culture for investing, but there is as well a government that is giving the right tools to people to invest, and certainly helping them out. So this is still a problem that they have to find a solution, hopefully.
Yeah. I would have expected within the EU at least they would have kind of smoothed things out a little bit there. But it's really interesting that there's a disincentive to buy even within the European Union.
Yeah. The currency certainly helps to help the economy, because it's a strong currency, the euro. So this is certainly helping in when there is volatility, because it's a strong currency. So amongst 27 different countries, so that certainly helps when there is a little bit of volatility around. But
gives you some stability, yeah.
Yeah, it gives us stability, yeah. But in terms of taxation, we're still way behind.
Okay. Hey, look, I think we should grab the last one, which was a great article you picked up, which was about the outlook for property prices here. Commonwealth Bank, might have been Westpac in there too, but definitely Commonwealth Bank. Do you want to hit us with that one? Because that's a good piece that maybe we can finish up, but it's a bit of a different flavour to the other things we've spoken of.
Thank you, Paul. Yeah, that's certainly... last year we had a boom here in Australia of the property marketing. The property market for probably the last 12-18 months has been going through the roof. That's obviously something that is abnormal. I think Australia, you correct me, Australia probably has never seen anything like that before. It's unprecedented. And obviously that has been pushing the prices of the property very, very high, and that at the same time pushed a lot of people to invest in shares in Australia, and certainly what the article was talking about, was talking about how this could slow on the coming year because of the interest rates at some stage has to go up to control the inflation. to control the inflation in Australia, the interest rates will come up, and that will be a disincentive to have a mortgage, because that means that you have to pay more interest on your mortgage. So this is certainly something that will swing, will bring this down a little bit, that growth down a little bit in the next couple of years. What is your take on that?
Yeah, it's interesting the numbers that they've got in there, isn't it? So this is the Commonwealth Bank head of Australian economics, Gareth Aird, I think is how you pronounce his name. But they're forecasting house prices would drop 10% in 2022.
Yeah,
10%, which is pretty significant. In 2023, I think I said 22 before.
2023,
they're forecasting.
Yeah.
And that's on the basis that they expect the RBA cash rate to be at 1.25%. Now, that's by the third quarter of the year. Now, currently it's at 0.1. So that's, I mean, if you sort of did it in roughly half increments, that's 5-ish rate rises between now and the third quarter of 2023. I suppose you'd get there. I mean, they meet, 11 times a year, 10 times a year. I suppose you could get there, but proportion, like still an official interest rate of 1.25. So then presumably that means home loan rates at 3.5, 4, something like that. Like historically, that's still a low interest rate, but in terms of magnitude, it's a big step up when we're only at 0.1. But I mean, the Commonwealth Bank, they've got a lot of data, and they certainly know what's happening with property prices, the biggest lender in the country. So they ought to have good visibility on this sort of stuff. So I think it's worth paying attention to their forecasts. I mean, it'd be interesting to see. It's not very often that the property market drops. Usually it kind of just goes sideways and people just don't put their house on the market. So it'll be interesting to see if it does actually drop. But certainly, I thought this was an interesting piece, and certainly one to keep in mind if you're a prospective purchaser. Along these lines too, I saw an interesting one. I don't know if you saw this one, Alessandro, talking about New Zealand. So the New Zealand Central Bank has put interest rates up a couple of times already. And they're desperately trying to pull in the New Zealand property market because it's just gone nuts. And New Zealand, they don't even have capital gains tax. So it's from a tax point of view, it's heaven. So their property market's going nuts. But the point was made that most of the banks over there are actually Australian banks. They're subsidiaries of Australian banks. So if there was some sort of property crash in New Zealand, the bad debts would flow through to the profits of Australian banks, which would obviously not be good in terms of their capital strength. And if it should happen that the Aussie market fell back at a somewhat similar time, this piece was just suggesting that our banks are quite exposed, and that effectively the Australian economy is linked to the property market in New Zealand, which was an interesting piece. I don't know if you saw that one at all, Alessandro.
No, I missed that. Thanks for bringing it up. But definitely, I knew that in New Zealand they don't have the capital gain tax, and I know that there's been They've been pushing already pre-COVID on investing in New Zealand. Lots of Australians as well, because they have Australians and New Zealand, vice versa. They got the chance to invest there, and vice versa, New Zealanders the chance to invest here in Australia. So there's been a lot of people investing in New Zealand because the price of the property is much more affordable than here in Australia. And so that's actually something that started before COVID, pre-COVID, but it obviously has been kind of strong, has gone stronger now during the pandemic. Certainly something to keep watching, because it might have effect on the Australian economy for sure.
Absolutely. Absolutely. All right, Alessandro. Well, look, I think we might bring this one into land. I think we've covered a few different topics there: markets, crypto, property, and even the Italian share market. Hey, you never know what you're going to get when you listen to Market Noise. So, look, everybody, thank you for listening to us for another week. Next week, I'm not quite sure who's going to be in the guest chair, but it will be someone from SixPark. So we'll have SixPark, the digital advice providers that you guys might have seen. We link to their tool at the bottom of the Gaining Choice email. So I've got someone from there coming on to join me next week. So that should certainly be an interesting discussion. So keep an eye out for Market Noise next week. But until then, as I say, thanks for listening to another Market Noise / Financial Autonomy podcast. Alessandro, thanks for jumping on the line on a Monday night and sharing some of your insights. It's fantastic to have you aboard.
Thanks, Paul. Great to be here. Thank you.
Thanks, Alessandro. See you, everybody. See you next week.
Bye.